New traders usually find it very difficult to become profitable in Forex. Although it's impossible to find reliable statistics on the subject, I've seen estimates that over 90% of small or retail traders lose money, and it's only logical that a huge proportion eventually blow through their capital and have to give up trading without ever learning how to consistently turn a profit. This channel will be explaining traditional, support and resistance-based trading methods which are sound, tested over time, and which can indeed help a trader make a living from the markets. And don't worry, I'll get into those trading methods in the very next video. But a new trader might be wondering, why should they trade this particular method over any of the literally thousands of other methods that can be found strewn across the various sites and forums on the internet? Or instead, if they should be signing up for one of the glossy expert indicators or signal services advertised from within MetaTrader itself. In fact, I'll look at that last point first. When you buy an expert advisor or subscribe to a signal service, you are placing your money in the hands of a stranger who will take no responsibility at all if you lose money. You cannot know what methods they use to trade, so you won't learn a thing yourself if you go down this path. You're just placing your fate in someone else's hands and hoping that it works out. Some people might be happy to take this risk, but for me, I would rather learn to trade for myself than be a hostage to someone else's success or failure. But if you're going to trade for yourself, you need two things. Firstly, you need a profitable trading method, and secondly, you need to master your own emotions in order to stick with that trading method without deviation. Now, there are as many trading methods out there as there are traders. There are hundreds of indicators, all of which look very enticing to a new trader. But please trust me, from personal experience, I can assure you, you will not find a profitable trading system if you start going down the path of looking for a holy grail of indicators or indicator combinations. Now, there are two types of indicators. Some are below the chart, and these are usually called oscillators. Others are displayed on the chart themselves. All indicators use mathematical formulas applied to the price as represented by the candles, and they'll either show the market direction in a simplistic form or try to, and that's what oscillators are aimed at, or they try and add some kind of context to the price movements. Each indicator has one thing in common. It's trying to do your thinking for you. They also have something else in common. No indicator can successfully predict future price movements at all. So given this, would it not be better to learn to analyze the price for yourself without the indicator doing it for you? Your brain can be far more effective at understanding a chart than any indicator ever devised. Furthermore, the big money, banks and hedge funds that make up the overwhelming majority of money traded in Forex, do they use fancy combinations of indicators? No, they do not. They use traditional methods that have stood the test of time: support and resistance, supply and demand, trend lines, chart patterns, aligned with their understanding of fundamentals, which is well beyond anything a retail trader can hope to learn. But if we use similar trading methods to the big players, we can read what they're doing in the markets and walk in their footsteps, and that's what this channel is all about. Now ask yourself, if you're not convinced already, who makes money from Forex? The big banks and hedge funds, or the vast numbers of small traders? The answer to that should be pretty obvious. So, do you want to be trading a method that none of the big players in the markets are using? Or do you want to trade the same way they are and ride along on their coattails? Which makes the most sense? I'll leave that for you to think about. Now, as I said earlier, traders not only need a profitable method, they need to conquer their own emotions if they're going to succeed. Each of us have our own personalities. Some people are extremely methodical by nature and like nothing more than to just follow a set of rules, and for them all they need is a profitable method to trade and they're set. But not everyone is like that. I know that I'm not. My emotions, if I listen to them, will stop me out of fear from opening trades when my method calls for an entry. And fear as well of taking a loss will make me move my stop loss away or even remove it altogether if the price starts to move against me. Fear of missing out will see me snatch at small profits or jump into entries that are not in accordance with my trading method. And if I've had a few good trades in a row, I can get overconfident and enter trades when I should be standing back and being patient. It's still a daily struggle for me to discipline myself and not listen to what my emotions are telling me, but I'm steadily winning that battle. I've done this in two ways. Firstly, I spend time during the week back-testing old charts when the market's quiet. I take practice trades and record the results. This gives me assurance that my methods are sound, and it trains my mind every day into good habits. And secondly, at the end of each week, I spend a few hours going over every trading decision I did or did not take during the week. I see whether or not I traded according to my methods, and if not, I ask myself why that happened. Lastly, I no longer go looking for new trading systems whenever I have a run of losses. It can be such a temptation to blame your system when things go badly for a week or two. But that's where backtesting is so important. If you've done the research to know that your system is reliable, then you know you don't need to go looking elsewhere for something better. And by the way, I strongly suggest that anyone who's interested in trading the methods I'll show in this channel, they should firstly go through and do that backtesting for themselves to make sure that it's a method that's going to work for them. Don't just start entering trades without doing that research for yourself. It is so important. So that's all for this video. In my next one, I'll be looking at the concepts of support and resistance, what they mean and how to identify important price areas on your chart. So I'll see you then.